So we can look and see that nearly 70% of the Bitcoin in the world has not actually transacted in over a year, and nearly 30% hasn't transacted in 5 years, meaning it hasn't moved. Now, I bring this up for several reasons. One, because it shows that many people, 70% of the Bitcoin that's out there, the people that hold 70% of the Bitcoin, haven't intended to sell it in the last year. And we can kind of extrapolate from that and go, okay, at what point are they ready to sell? At what point are they going to go, okay, now is the appropriate time to sell it? And as we're seeing more demand from the potential spot ETFs, we have to go, all right, where is the supply going to come from to match that demand? Is it going to come from these people that have been holding it a long time? And maybe it's only going to come from people that are relatively new to it, that are maybe trading it or trading this move in Bitcoin that might come with the proposed spot ETF. The other reason that I point this out is because these are new metrics, the idea of what hasn't moved and what wallets it sits in, those kinds of new metrics that we can see because of the transparency of blockchains. We can see all the metrics in terms of what wallets own what crypto assets, and those are new metrics that we have to kind of extrapolate what we think will happen to the price of those crypto assets based on that data that we have. And we can look back in the recent past, because Bitcoin and crypto haven't been around that long, and we can say, here's what's happened in the past when that number has reached 60% or 70% or even more. Or we can also take that data and go, what do we think will happen in the future logically? How many of those people do we think are willing to sell? We can even go a little bit further and go, how many of those bought at the peaks of 69,000? How many of those people bought lower than that at 20,000 and have just been holding for a really long time, holding through that huge upswing, huge downswing, and now they're holding again? And we can kind of guess or extrapolate or make logical assumptions as to when those people would be willing to sell and what that might do to the price. But the fact is, we have new data. And so if you're a financial advisor and you're helping your clients, you have to realize that data that we're going to have on crypto assets now and in the future is different from the data that we've had on any sort of assets in the past. We haven't necessarily had this level of information or presented in this way. We haven't really looked at information like how many people have owned Apple stock for a certain amount of time, have sold or haven't sold, or how many people are looking to hold it as an asset versus how many people are looking to actually transact with it. We haven't necessarily had that data, or it hasn't been all that relevant. Whereas now, with an asset like Bitcoin with a fixed supply, or when we start to talk about other assets like ETH, we can look so much farther down in the data and extrapolate and make educated guesses and logical guesses as to what that is going to mean to the price. But we have that information. And again, as a financial advisor, it's incumbent on us to understand what some of that data is so that we can read it, so that we can do our due diligence, so that we can have intelligent conversations with clients about allocation risk, where it fits in their portfolio, what we think is going to happen with the price, having a plan. All of those things come from understanding what some of those additional metrics are and how that might impact the price.